I started getting into trading when I learned about cryptocurrency, very much focused on manual, steadily losing money. Finally, I came upon Petko's courses and learned about EA Studio, and it's definitely still the product I use 95%.
Samuel Jackson is a full-time trader who specializes in algo trading by using strategy builders such as EA Studio, FSB Pro, and Express Generator.
Consistency or higher profits?
I'm definitely looking for consistency.
Do you have a preferred broker that you use?
Yeah, I do. I've definitely been stepping away from the prop firms. From a risk point of view, I feel like you take control back, you take ownership back, and you're able to trade on your own rules, and you don't necessarily just blip over a slight prop firm rule and suddenly you've lost the entire account. So that's why I lean towards live trading more personally. Darwin X Zero is a great program. That's certainly one of my favorites, and that's not a prop firm. Recently, I traded grid trading system on an iFunds account. In the Trump news event, it had lost the account because the drawdown had exceeded the 10% and it actually got into 13%.
More robots with smaller profits, or do you prefer fewer robots with higher profits?
I prefer more robots.
What would you do differently?
Probably I wouldn't try and do everything at once. So when I started, my mistakes were...
Sam, welcome to the show. Can you give us a little bit of an intro? Just tell us who you are, how you got into trading, what your background is.
Hey, Ilan. Yeah. Happy to be here. My background is I was an engineer for over 10 years, a structural engineer. Did involve lots of programming and stuff like that. And I started getting into trading when I learned about cryptocurrency. And I bought in. I kind of learned about cryptocurrency right at the 2017 peak. Bought in, and suddenly everything starts going down. And in a mad attempt to try and rescue my money, I guess I saw price fluctuations and stuff like that, and kind of thought, well, I wonder if there's a way I can profit even though it's going in a different direction from the price swings. And so that kind of was my start. And I was doing that manually for a while with no success. I had no real understanding of what trading was. I didn't really have any kind of good plan. It was very much just one trade would be based on feel, another trade would be based on a different field, different indicators, and obviously that we know where that heads. And probably it took a couple of years of playing around with that and kind of using TradingView and stuff like that, and very much focused on manual, steadily losing money no matter what way the market was going. And finally I came upon Petko's courses and learned about EA Studio and learned about algorithmic trading.
Sorry to interrupt. Did you know anything about algorithmic trading? Did you know what it was prior to that?
I had no idea. I didn't know what an expert advisor was or anything. Okay. I just, I had actually done a bit of coding, but I didn't know, I didn't know it was a thing. I knew some programming and thought, there's got to be a way to do this. And I worked out some way through a complicated API to buy on the Binance. So a lot of work, a lot of mistakes made, and certainly not the best way to do things. And then I found the software that was already made that was way better than I could ever do. And so I just started using that, and I was like, well, this is a game changer. And that's kind of when the direction changed. So I did that full time for about maybe 9 months, thinking, great, I'll make money from trading very quickly, and I won't ever need to go back to work again. And then I ran out of money and I had to get a job.
So you actually stopped working, you stopped your 9 to 5. And you just decided to become a full-time trader.
I took a big risk on it, and I quit my job.
Wow. Okay.
With no, with a timeline of AKA when my money ran out and the pot ran out, and then I thought, right. So then I was doing both in tandem for probably about 18 months. So I was working full time and trading on the side. And then finally saw the kind of results that I needed to be able to kind of then step away and do it full time. So it was a bit of a few years journey, really.
So tell me, how long Would you say that you were using the software before you started making consistent profits from your robots that you had generated yourself?
Well, it was probably at least 12 months, maybe more. I would say the biggest mistake I made there is I probably did, I don't doubt I had many profitable robots pretty quickly. I don't doubt that EA Studio was giving me many profitable robots, but I think I was. There's a lot to this. They allow you to develop the robots, but then you've also got to know how to trade them, right? You can give someone the same robot and they can set their risk wrong. They can trade during a bad period and just give up and just trade the robot all wrong, right? So you've got equity curves that kind of go up and down. And probably what often happens, I've done it many times, you put on a robot and then it makes 5 or 10 trades and you're in a loss and you think, oh, well, that's no good. But if you go in the back test and have a look and you really look, that's happened many times in the past. So there's no reason to panic. And so I feel like I was doing that a lot. And finally, what really turned the corner was when I really understood the risk management side of things and the playing out the probability side of things. And I don't think my flow was similar for a long time. It's just the application of the trading and how I used the robots and set the risk and really rode out the drawdowns back into profits. That took a while. That took losses. That took experience. That just took a bit of time and effort to have that happen. And that took about 12 months.
Okay. Obviously, you use both EA Studio and FSB Pro. How do you decide which one to use, or how do you use them as complementary software?
It was EA Studio that I started with. And it's definitely still the product I use 95%. So EA Studio is definitely my preferred product. It's my preferred generator for sure. It's deceptively powerful, and it's as far as my experience goes, it's definitely the best out of the box generator. So in terms of very quickly sticking with the default settings and just hitting generate with some basic settings, EA Studio is able to give you some very good strategies without too much kind of in-depth customization in that. And I've noticed that over the years. FSB Pro I did use it for quite a while, thinking, it sounds like, okay, it's FSB Pro, it's the more advanced product. And it is. It's got, both have got their advantages, but FSB Pro, it's like EA Studio, and this from talking to Miroslav. EA Studio is actually, the generator there is based on lessons learned from FSB Pro, because FSB Pro was the first generator, and Miroslav, the developer, he learned lessons about how to make things better, and so that's where EA Studio came in. There was lots of lessons learned, so it's much faster. The robots backtest faster, and the strategies they're simple, and also they just tend to work. FSB Pro is better if you have trading ideas and you have strategy ideas and you want to then, without having to code from scratch, you can even code your own indicators and stuff like that and include them in the FSB Pro environment. There's lots of available indicators, so there's a lot more to work with if you want to test ideas from your own logic. That's where FSB Pro shines, but EA Studio it's kind of the faster, slicker product out of the box.
Okay.
So that's what I use most of the time.
All right. So, just very quickly, for somebody who's new to using the software or is interested in generating their own robots, can you give us a quick run through of how you would go about generating a robot? I know that we have some videos on the channel where you have run through your process, but just if somebody hasn't watched them, how would you kind of advise them to start as a very initial process?
There's several tweaks on a workflow, but I think the main kind of tests I look out for is I will generally start by setting the generator running with a sensible statistics that I want. I obviously want robots to come out I don't want a robot to come out that's got a terrible return to drawdown ratio or has a rubbish profit factor or anything. So I'll let the generator run for several days. I'll let it run for several days with a kind of stricter acceptance criteria. Okay. So I have maybe 100 or 200 EAs after that, and I tend to typically work with the H1 timeframe personally. I would recommend beginners do that. Just it's more stable. It's also a kind of good combination between there's less bars for a longer period of history, so you're able to test like 10 years data, and it's able to kind of generate faster. It's a good compromise there. I just personally really like the H1 time frame, and I'll generate on the I personally use the premium data, so Dukas copy data to generate. When I've got enough in the collection, then I'll start to prune those out, maybe kind of use there's tools in EA Studio to kind of go, well, maybe let's just look for maybe higher trading ones, so ones that with higher counter trade, so I can maybe narrow it down that way. By the way, there's all sorts of built-in kind of tools to make this a lot faster in EA Studio, but in terms of a process, I like to see any particular robot. One, it should perform reasonably well and reasonably similarly on several different data sources, which EA Studio is excellent for because it's got inbuilt many different data sources. You can test it on BlackBull, you can test it on 8cap, you can test it on Dukas copy, and you can kind of see very quickly, well, this backtest charts all look similar, so that's a very good robustness test. Often I like to see them trade at least well on a different market. So if I'm trading, for example, USD JPY, I don't need it to trade well on many different markets. I'm only going to trade it on USD JPY, but it's also a bit of a kind of confirmation that the logic behind that strategy is good if it also trades maybe reasonably well on one or two other markets that it hasn't been generated on. And then probably next, there's all sorts of robustness tools within EA Studio. So there's the Monte Carlo, which is one of the best ones. So the Monte Carlo test will allow you to take that strategy and modify the parameters within some limits and test to make sure that it all still passes a certain threshold. So typically I'll set mine with the, and this is very close to the EA Studio defaults, I'll run 20 tests, and I want to see that 80% of them with the changes of parameters are still just profitable. They don't need to perform great, but just profitable. And that's kind of a good indication that it's not kind of too sensitive to changes in the settings. And probably I would say the absolute best two robustness tests are one, out of sample data. So testing, once you've generated the strategy, you give it a certain set of data and you test out of sample to go, well, does this still perform well on data it's never seen? And the final best test is to put it on a demo account and trade that and get 10 to 20 trades, probably more like 30 even, ideally, which can take a while on the H1 time frame, but which is why sometimes I go for less. But make sure you've got at least 10 trades and it's trading similarly on a demo account. That's kind of the final test before I start scaling up on live.
Okay. And just very quickly, when you're creating robots, generally speaking, are you looking more for consistency or higher profits?
I'm definitely looking for consistency rather than higher profits. I make sure to set my risk based on like the worst that's happened in like the last 10 years, right? Okay. So if I take a robot, it's going to struggle if that robot has got one particular very big dip in it, because then it's like, well, I won't make much money because I've got to set my risk so low. So I'm certainly looking at things like balance line stability and R squared so that it's a bit consistent. And I also don't want overly long periods of stagnation. That's one of the parameters that I'll definitely use in EA Studio, the stagnation period. I don't really want to trade a strategy that is stagnant for, say, over 6 months, because it's really rough riding out that period where a robot's just kind of flat or it's going into a bit of a drawdown for several months. So really, I'll try and get that down to as little as I can. And probably the biggest parameter I'm really looking for is the return to drawdown. Okay. I'm okay to have a drawdown. I'm okay to ride out a drawdown for several months, and I have done, as long as that then comes and, after a year of trading, it's made a return that's much better than that drawdown. So I typically like to see 2 ideally, but at least 1.5 in say a year is what I'm aiming for. Okay.
Let's have a quick chat about your sort of strategy and philosophy. What would you say is your trading philosophy when it comes to EAs? More robots with smaller profits, or do you prefer fewer robots with higher profits on a backtest and in a demo environment before going live?
I typically, and I think this is where EA Studio it plays into EA Studio, is I prefer more robots combined into an effective portfolio. Okay. There are advantages and disadvantages to being an algorithmic trader. And, and using the thing like a generator. I mean, if you're a manual trader, you can get very good returns because you're watching the charts all the time, and you're able to get little movements that really are too hard to code and stuff like that. So your algorithmic trading strategy, any particular algorithmic trading strategy, typically it isn't going to get the 300% a year that's possible with the best of the discretionary traders, right? But you can very much smooth that out if you combine many of them. So if I can, I'll typically combine, say, 10 USD JPY robots, and any one of them is good. It's okay. It might get a return to drawdown of, say, 0.5 to 1, and the profit factor is 1.1, 1.2, and it's steady enough. But when you combine them all, you still get all the returns, but often as long as they are not overly correlated strategies, they might be even better if they're on different symbols and stuff like that. But you can even do this on the same symbol. You smooth out the drawdown, so the drawdown reduces, but the return stays the same. All of them is just the sum of the returns. So that's a really good way to kind of more robots trading together. It's a really good way to increase your return to drawdown ratio, essentially.
You mentioned earlier that you've written out drawdowns for months at a time. At what point do you kind of pull the plug and just say, all right, this one is not going to recover, or the drawdown is just too big at this stage, let me rather cut my losses and see what I can do in terms of recovery? Yeah,
so typically what I'll do with that is, there's kind of two ways to go about it, and both are good. I typically I don't go for perfect, I go for what might be simpler. There's an effort involved too. So sometimes this maybe isn't the absolutely perfect approach, but it's easier to do and easier to manage and less work for me. So I'll maybe take a slight cut into my, expected kind of returns and stuff like that for this. And what I tend to do is I tend to keep it simple, and I just look at the back test over the last period. So typically 10 years for if I'm doing H1, and I'll look at what was the worst risk, what was the worst percentage, and on any robot, if trading live, it has a drawdown, that single robot has a drawdown that exceeds anything it's had in the past by too much of a factor. Usually I'll add a little bit of padding. If it exceeds that and has the worst period it's had in 10 years live versus the back test, that I'm going to call that. I'm going to go, that's no good. And the other kind of good way to do it is to make sure you track the stagnation's a bit harder, which is why I use the drawdown, but the stagnation period. So, if you've got a robot with, say, its worst stagnation period on the back test is, say, 2 months. So that any drawdown, it should always reach a high every 2 months, right? So you might go into drawdowns, but it shouldn't last longer than 2 months. And if it does, that's a good indication that, I've been in this drawdown for longer than it's ever been in supposedly a drawdown according to the back test. Again, a little bit of padding's always good, real versus the back test, but it should be reasonably reflective. So that's another thing I would look at. But like I said, it's just a bit harder to monitor that than the actual drawdown value, which is why I usually do that. Okay, good. You're a full-time trader. This is what you do. And you obviously have a number of accounts. You've got your live accounts, you've got your prop firm accounts, you've got your instant funded accounts, Darwinix, etc. How do you firstly manage them all, and which do you feel is the most scalable? I've got them all on VPSs, so they're all running on VPSs, and I'll log in because I trade on the hourly. I don't need to, and it's another good reason for trading on the hourly. If I was trading on the M5 or the M1, you need to monitor them much more frequently, right? Probably close to daily. On the H1, weekly is plenty, right? So I'll have a look at my accounts weekly, once a week, and I manage probably 10 to 20, somewhere between that at the moment. And I'll look at the portfolio, I'll look at the EAs, I'll look at the statistics on FX Blue. I have recorded in the spreadsheet the statistics for each robot. So I can look at the robot and go, well, has this on FX Blue shown a worse drawdown? Because obviously you can do that. And for people that don't know, FX Blue lets you log into your account and actually track the individual robots. So the magic numbers are tracked. So that's just the way that you can do this. So I will log into FX Blue, see each magic number in the portfolio, look at my spreadsheet and go, has this exceeded my threshold? It doesn't take too long to do that. It might be a couple hours once a week. For managing many portfolios, it's really not time intensive or, brain power intensive. It's just it's a relaxing text, really. I trade live accounts. I trade prop firms, Darwin X Zero, like you say. I've definitely been stepping away from the prop firms and more towards live and instant funding accounts. Darwin X Zero is a great program. That's certainly one of my favorites, and that's not a prop firm. It sometimes gets mistaken for that, but that's a bit different. I would say the longer I trade, when I started, I went for prop firms. It was all about prop firms. They're glam and glitter, 100K account for $1,000, great. And so, I've passed many challenges, and I've got a few accounts running, and also I've had bad experiences with them as firms. It seems like sometimes they're not on your side, and they're not actually wanting you to make money sometimes. And so that can be frustrating, and you're stuck to certain rules. And so more and more, I'm kind of stepping towards growing my own live capital with live accounts, and also instant funding. Like iFunds is a new one that's very good because you can pay like $1,000 roughly, and you get like a $10,000 account, so you've leveraged up and you can trade on that. Yeah, more and more I lean towards growing your live capital. Okay. And the other reason I lean towards that these days is I think Darwin X Zero is an excellent program. I definitely recommend that. But if I can give an example, recently I traded, which is not my bread and butter, but I traded a grid trading system on an iFunds account. And even in the Trump news event, basically that breach, and I set my risk so that it certainly hadn't had a drawdown in the last 7 years is what I did of this magnitude. So I set my risk very kind of safe, as I always do. But the Trump news happened recently, and that caused the account to dip to, I think when I looked at afterwards, it lost the account because the drawdown had exceeded the 10% and it actually got into 13%. Okay. So it wasn't a massive amount over, but then I lose the initial fee, right? But I could have been trading that on if I'd taken that $1,000 I paid for that account and put it into a live account, I could trade a little bit more risk, because obviously if I only trade for 10% risk, I'm not going to make so much. So I can increase my risk to maybe tolerate 30 or 40%, because usually they're equity drawdowns. But in this case, even though I might have set my risk to maybe have a 30%, 40% drawdown, it might have dipped to 45, 50. But it would have recovered, because that's what happened. And I wouldn't have lost the account. I would still have that money. You know what I mean? So sometimes I'm like, from a risk point of view, I feel like you step away, you take control back, you take ownership back, and you're able to trade on your own rules, and you don't necessarily just blip over a slight prop firm rule and suddenly you've lost the entire account. So that's why I lean towards live trading more personally.
Let's just quickly go back to iFunds for a second. You were talking about, you're saying that you hit the 13% drawdown, which was unusual, and you lost the account. And it would have been better to maybe put your money into a live account, where it could have withstood a higher drawdown and had the time and the space it needed to recover. But I guess the difference there would be, even in the recovery, when you would have made your 5 or 10% profit, your profit would have been significantly less than had the account not blown, and you would have been able to make that same profit on a 10K account versus a 1K account. So that is the other side of it, right? And that is the risk you take when you do it, but the payoff is so much bigger.
With the iFunds.
Correct, yeah.
Yeah, no, absolutely is. Do get a bigger payout. In this case, I was actually trading the same system on 2 accounts. I was trading it on iFunds and I was trading it on a live account. And the live account, fair enough, wasn't making as much money, but when it went down, I was trading higher risk. So obviously, it still wasn't making as much money. But when things went south, even though I breached my expected drawdown, I recovered, and that account came to a new high profit eventually, right? I didn't lose the account. I still had the drop in equity was there for a while, but then it came back up, and I didn't lose the account because of the rule. I see both sides, But yes, it's up to each individual. I started leaning towards choosing reputable brokers and putting my money in with them over prop firms, but it doesn't mean I don't trade instant. I've got a proportion.
Yeah.
I would say when I started, I was 100% prop firm. As I kind of have gone through the journey, it's more like maybe been for a while, maybe 50-50. And I would say now I'm maybe more like 70-30, you know,
Okay.
70% live, and I still do them. So I'm not saying they're not worth doing. I'm just saying that's just.
I think it's like anything in trading, right? You gotta diversify your risk. You gotta have options.
Yeah, exactly.
Okay. Talk about live trading. Do you have a preferred broker that you use?
Yeah, I do. It's BlackBull Markets.
Okay.
So I recently went and did a interview with some of the staff and the CEO at BlackBull Markets. That video will be in the description. Yeah, I was very impressed with what I saw. They've got excellent leverage. They've got, I think the fastest execution speeds according to, I can't remember the name of the website, but there's a website that basically compares all the execution speeds of the brokers, and BlackBull's is number one there. Also, they have an institutional account, which gets you, they've got great spreads anyway. They got great spreads and trading costs anyway, but they have an institutional account that usually would cost you $20,000, and that gets you even lower spreads. And I think it's 50% off the commission for each lot you trade. Which really helps. Trading costs make a big difference in trading.
Yeah, I mean, that can be the difference between being profitable and unprofitable, really.
Absolutely. It's quite easy actually to come up with a strategy that will maybe have an edge, but when you factor in trading costs, it usually takes it away. So that's the hard thing. Can you create a strategy that has such an edge that then also beats the trading cost?
I think that's also one of the advantages of using EA Studio with the historical data that is included from the brokers, or being able to EA adjust or customize your broker's data, because then it includes those costs in your backtest. So you can actually see exactly how that strategy would have performed with that broker and their trading conditions.
Yeah. And even to the point now, it never used to, but there's been a great update in, certainly within the last 6 months, maybe longer, but it wasn't there when I first started using it, is you had to set a fixed spread. And now EA Studio is actually able to, it's got the history of how the spread has fluctuated. So it includes what the actual historic spread was at the time of the trade. And that's excellent. The point with BlackBull is that you're actually able to get a institutional account for being a subscriber of the channel, the trading channel, for 2,000 initial deposit rather than 20,000, which is I jumped straight at that. And,
absolutely. I don't know of any other brokers that are offering anything like that. That's pretty incredible.
No.
I mean, you're essentially getting the same trading conditions that hedge funds and banks and financial institutions get for a $2,000 deposit, which is
for a tenth of the cost.
Okay. Sam, very quickly, advice for new algo traders. I mean, I know we covered some of it earlier, but what would your advice be to somebody who is just starting out, who doesn't really know anything? They've heard a little bit about trading robots. They've probably seen some stuff on social media or on the internet. Some of it, as you know, is completely outrageous. But what advice would you give somebody starting out? Well, what would you do differently?
Probably I wouldn't try and do everything at once. So when I started, my mistakes were that I tried to do everything at once. So I was developing strategies with EA Studio and kind of working on that process and then trading them. So it took me quite a long time to get to the point where I was actually trading, because I was always looking for a perfect system, always looking for something that I was sure I was going to make money all the time, and it just doesn't really work like that. These days I trade 70% of my own systems, but I also trade some third-party EAs. And that's a relatively new thing, and they've been doing really well. And I applied the principles I learned to those. But I think if I was to start again, for the fastest thing, what I would do is I would dedicate some of my learning time to learning EA Studio and testing and learning my own way of developing strategies, and I enjoy that, and it will come to it. You put in the work and you'll get the results. But then to get instantly trading and learn the principles of trading, learn the ride out the drawdowns, learn the how to set your risk and stuff. Well, there's plenty good third-party EAs that you can purchase for a very low cost. It's not nothing, but you can get them for nothing on the MQL marketplace. But even some great ones, the Forex Gold Investor jumps to mind. It's under $300, and it's definitely made me a lot more money than that already. And it lets you learn how to back test it, set your risk, put it on a MetaTrader, get instantly trading on a demo account. Always start with a demo account, but then once you're kind of comfortable with the results and what you're seeing, switch to maybe small live, start to scale up slowly. I would definitely be like, well, I'm going to learn how to develop trading strategies myself, but also I'm going to learn just how to take someone else's strategy and kind of go, well, how do I trade this? How do I set my risk? How do I, the mechanics of it all and the probabilities and the psychology and all that. It lets you get started quicker, I would say. So that would be my main advice to anyone wanting to do algo trading.
Oh, fantastic. And I think it's also important to note that...
Oh, I could add one more. I'll add one more thing, by the way. It's just popped into my head, is definitely seek out good mentorship, coaching, learning resources for all parts of that, whether it just be the trading or the strategy development. That's a game changer. And, I've heard it said that you'll pay tuition one way or another with the markets. You'll either, usually I've heard it quoted that it's around $50,000.
Wow.
Your trading education is going to cost you $50,000. I mean, that's a high number. I definitely didn't hit that, but the principle stands that you will pay money in one form or another. So if you jump into the markets too quickly and just start trading, guess what? You'll learn by just the markets taking your money. It's much more controlled to seek out good learning resources, pay for mentorship, and put in the time and effort into learning, and lose less money and then turn that into profits. It's a more controlled, advisable approach.
Yeah. So I just have two things to add to that, and that is that firstly, it doesn't necessarily have to cost you money initially. So for example, we offer the 21-day program, which includes courses, robots, access to the software to try it out. And all of that is completely free. And the second thing is that you have to accept that losses are a part of trading. You're never going to be profitable all the time, no matter how good a strategy is. You mentioned that you backtest for 7 years or 10 years. There's always periods of drawdowns. There's always periods of stagnation. You are going to lose money at one point or another. But the point is that in the long term, you're still making money. You're still profitable. That is what trading is about. I think so many people get so scared of losing money that as soon as they lose a little bit, they just stop trading. And that's really the wrong approach. You have to accept that there will be losses. Understand what your threshold for those losses are, and trade within those parameters that you're comfortable with. But accept that there will be losses and try. It's very difficult, but try not to get too emotional about it. And never trade money that you can't afford to lose.
Yeah, absolutely. And that's emotions present even in algo trading. Sometimes it's said it's not, but it's just on a different level and a different place. I would say don't think of profits in terms of monthly or even 3 monthly. Think of them more 6 monthly to yearly. That's all you're interested about. Yearly really is what I'm looking at. I'm in drawdowns right now, but I've been through it plenty times, so I'm not really worried about that. Experience
matters. Experience counts.
Yeah,
absolutely. All right, so I think we've covered pretty much everything that we wanted to cover. Sam, thank you so much. Is there anything that you want to add before we sign off?
No, I think we've covered basic, definitely the principles of how to do this. It's that experience, it's practice. You
fantastic.
You can be told, you can be told what to do. And it's actually taking that and then going and practicing that is going to make all the difference. Yeah, no one's just going to listen to one podcast and just boom, I know everything to do. You've got to practice. You've got to get the experience.
Brilliant. Sam, thank you so much for your time. Thanks for taking the time to chat to me. Guys, I will leave some links to some of the stuff that we discussed down below in the description. If you have any other questions or you have any comments or you'd like to add anything, please let us know down below and we will see you soon. Thanks, Sam.
No worries. Cheers, Em.
Take care. Bye.